Welcome to Market Movers, where we identify market moving headlines and then discuss ways to either hedge risk or create exposure in affected assets. We have Scott Martin.
Hi, Jim.
Scott, the biggest headline of the week: the Fed broadens out what they're buying, starts buying corporate bonds. There's talk of another potentially $1 trillion stimulus package in the form of infrastructure. Plus, there's better than expected data still. The retail sales was pretty good, coupled with that employment number from last week. What's the biggest?
I believe it's the first two this time, Jim. Usually I say all three, but really the Fed stepping back in here and continuing, let's say, to do whatever they possibly can. I think their terms have been whatever it takes to support the markets and economy eventually is something that's very big in my opinion and is obviously a quick reaction point, I believe, for markets. And then certainly down the road, something maybe as far as a July or August timeframe, that $1 trillion stimulus on infrastructure is something that's playing into market prices today as well.
One, I agree with you completely. But even with that Fed stimulus and the government, the dollar's weak, but not that weak. Metals, particularly gold and silver, are strong, but not that strong. What's holding metals back?
Well, it's been a little bit of this risk on trade, Jim. We've started to see with the Fed stepping back in, even though that does generate a lot of liquidity, which will, I believe, support metals at lower prices. The markets have been largely chasing back higher prices with respect to equities and in some cases bonds as well, as the curve has steepened, as we've talked about on Market Movers for the last several weeks. So what could eventually happen is the dollar could find some footing and further pressure metals. But I believe the long-term outlook, or let's say the longer-term outlook for metals, remains stable to quite good.
Agree again. I think the metals are misinterpreting. They're thinking risk on, and they're not railing because of that. I'm actually long silver. Gold and silver, the CME contracts come in the big contract. The micros, also liquid, weekly and monthly options in those. On to the 10-year. Okay, the 10-year seems to be stuck between 0.6% and 0.7%. Is this just the equilibrium between the Fed buying and the Treasury selling?
Yes, and the fact that the 10-year has a little bit of schizophrenia going on, I believe, Jim. So you do have the Fed buying, you have the Fed support, you have this effort to keep liquidity out there and rates low, as the Fed has discussed, but then you have this hope, if you will, of the economy refiring, which you touched on a couple minutes ago, which means that if the economy refires, we start to reopen the economy, then the curve should naturally steepen. So I believe that range you pointed out is very important and one that we'll keep an eye on as to whether it breaks above or breaks below when it comes to resistance or support.
Okay, the CME 10-year contract, one of the marquee contracts, tremendous liquidity in the futures and also in weekly options, well, all their options. On to stocks. NASDAQ is continued its outperformance, or it started it again. Is this a function of the stay-at-home economy being extended out further, or is it just a growth story of the stocks in general?
It's both, and it's the fact that the NASDAQ has led us here. And by leading us here, I mean the NASDAQ outperformed on the way down, and by and large has outperformed on the way up, even though we've had some catch-up trading in the small and mid caps. We've had catch-up trading on the value stocks as well. But what's really going to cut the mustard, if you will, going forward is the strength of those companies, in my opinion, in the NASDAQ or say the NQ futures, because those are the companies, Jim, that have the strongest revenue growth. They have the best looking balance sheets. And as you pointed out about the cloud, they have some of the best businesses in the business, let's say.
Okay, last question. CME launching options on micros in the fall. Big deal?
Big deal, Jim. It's just another vehicle that one can use to further hedge or take opportunity in their portfolio for this marketplace.
I agree again. We've agreed on everything today. Thank you for joining us on Market Movers, where we are helping to make you a better trader.